What is up, you guys? Today, Disney reported earnings, and a lot of people have been watching out for this. We're going to go over exactly what happened. We're going to go over Disney suspending the dividend for the first half of the year. That's pretty crazy. And we're going to go over my opinions on Disney and really what I'm going to do if I'm going to be taking a position and at what price. So sit back, relax, grab a cup of coffee if you need to, and let's get started. So Disney reports a 58% drop in operating income from parks and cruises, its worst hit segment. Now, guys, obviously, this is going to be a problem with cruise liners just getting hammered right now. Obviously, parks are going to be getting killed as well, and we kind of all expected this. I think Norwegian Cruise Line actually came out today and said that if things continue to be how they, are continuing to be with everything going on right now, that they might be forced to close the doors. This is a real problem. And I think that a lot of people, when they think about Disney as a company, they think about, movies, they think about theme parks. Not a lot of them realize that Disney cruises and these resorts, not only do they take a lot of money to actually maintain and keep up, but a lot of their revenue comes from these types of things. So we're going to go over some of the main headlines about the whole earnings that happened today. And we're also going to go over some technical analysis and where I kind of see Disney falling. So the first headline, Disney reports 58% drop. We already went over that. Disney reported mixed results for Q2 2020. After the bell on Tuesday, the pandemic has disrupted Disney theme parks and cruise lines, but is expecting to boost engagement on its streaming service, Disney Plus, ESPN, and Hulu. Now, ESPN and ESPN as a company has been dead for a while, but they got a big deal with the UFC, and I think that has been bringing a lot of people to the Disney Plus platform. And for instance as well, this Friday, May 9th, the UFC is going to be putting on an event, and it's going to be the only sport, guys, the only sport besides esports that's going to be on TV. So I think that's really going to do well for them, but that doesn't matter about this quarter. Another thing to remember, this was the first earnings report with Bob Chapek, the new CEO, not the old one, Bob Iger. There's two Bobs, but the new one at the helm of Disney, after former CEO Bob Iger stepped down of the role in February to become an executive chairman. And this is kind of Bob Chapek's time to shine, guys. I mean, he's the leader of one of the biggest entertainment companies in the United States and in the world, and not a lot of people know about him. He's not really been in the spotlight since he became CEO. So this earnings report, this was big for him. And so, the stock jumped around the news of the report, but then was down 2% after hours following the earnings call. And so I try to explain this to a lot of people that, the earnings call sometimes is more important than the numbers, because that is when the CEOs and the executive vice presidents and the whole executive team can kind of be, I don't want to say ambushed, but interrogated about, hey, what are numbers going to be like, next quarter? What is guidance going to be? How do you feel about this? How do you feel about that? And that kind of gives the sentiment of the runners of the company. And so that is important. I can't say that word, has disrupted Disney's theme parks and cruises, obviously, and it helps Disney Plus. Here's what Disney actually reported. Earnings per share of 60 cents, right? Revenue, $18 billion. Wall Street had been anticipating earnings of 89 cents, so they missed on EPS. And they were expecting revenue of $17.8 billion, which they actually did end up beating. Now, the next one. Disney Plus says it now has 54.5 million Disney Plus subscribers. We're going to talk about a couple things when it comes to Disney Plus subscribers, but let's finish this. Tuesday, they said that they saw growth across all streaming services platforms in the past quarter, and the company had 33.5 million Disney Plus subscribers as of March 28th. Disney reported that Hulu, you have to remember, I think they have either a really big stake or they totally own it now. They had 32.1 million total subscribers, 25% up from last year, and ESPN Plus grew to 7.9 million subscribers, guys. That's crazy. Okay, let's see. Surpassed the 50 million by April 8th. As part of its second quarter results, Disney said it saw growth across all of its streaming platforms. Now, here's something to think about. As far as Disney Plus is considered, my question, right, is not, I don't care too much as if I was going to be an investor of Disney Plus. If I was going to be an investor of Disney, I don't really care too much about what the actual numbers are now. I'm looking a year from now, a year and a half from now. And that's because there's a lot of companies, primarily Verizon, who is giving Disney Plus away 100% for free for a year for anybody who signs up. I just signed up for Verizon Internet, and they gave me 1 year of Disney Plus for free. Let me tell you something. I'm not going to be paying for Disney Plus after that year is up. For me, as a user, I've just found that there's not a lot of content on there. There's a lot of old content, but I'd rather watch Netflix. I'd rather watch YouTube TV. I understand a lot of people like The Mandalorian. A lot of people like, I think there's a Loki show or movie coming out, a Black Widow show or movie. They're trying to push more content. So I think that the biggest thing over the next year, if Disney's going to want to keep the subscribers that it has, they are going to want to really focus on not going to the blockbuster, movies as much, and trying to actually take them out of theaters and put them to Disney Plus, because as of right now, there's just not enough content for somebody like me to want to stay. Now, this is important. And I did not realize that Chinese theme parks are not open yet. They closed, if I'm not mistaken, maybe it'll tell us in this article, they closed the Shanghai and the Hong Kong Disneyland back I want to say like the end of January. So this has been closed for a long time. Shanghai Disneyland to reopen May 11th. Now, here's the thing, guys. Just because it's opening May 11th doesn't mean business is just going to go back to normal over there. Disney had previously reopened Disneytown, Wishing Star Park, and Disneyland Hotel in Shanghai in March. This will be the first Disney theme park to reopen after being closed due to, can't say that word. The park, yeah, I was right. The park has been closed since January 25th. They reopened their Disneytown. For those of you, I think it's kind of like Disney Springs. It's like their little shopping center that's outside of Disney. Let's see. CEO Bob Chapek says we will take a phased approach with limits on attendance using advanced reservation and entry systems, controlled guest destiny using social distancing, and strict government-required health prevention procedures. This is really important. We'll talk about it in a minute. Typically, he said the park has 80,000 visitors a day, but the government has mandated to operate at 30% capacity or 24,000 visitors per day. This is important because it's kind of hard. I guess, you could say the Chinese lie about the numbers over in China of Corona and everything, but I just said the word. I don't know if I'm allowed to say the whole thing, though. But seeing how the reopening happens over in China is going to be important because it's going to dictate and show if they can and how they can actually reopen in the United States. But this is pretty big. Now, shut down theme parks, costing Disney $1 billion during the second quarter. Kind of already went over this, but this whole aspect of the theme parks, of the cruises, of the resorts, all of this is really, really big. And also, Disney is evaluating its movie releases on a case-by-case basis as it navigates related closures. Now, I don't know if Trolls, that movie, or like Into the Forest or something, it was some big movie that they just did straight to streaming. I think it was Disney. But I think we're going to see this a lot more, not only with this going on, but just because they want more people on their platform. Because while they will be missing a lot of money from, a lot of revenue from movie theaters, once you have somebody on your platform, it's just a lot easier. You can control what they watch. You can control more about, it doesn't sound right, but you can control the customer a little better. So having them on the platform is better. The situation that's going on right now has crippled the movie industry as cinemas have been forced to close, and Disney isn't giving up on movie theaters in the wake of everything that's going on, but it's actually going to carefully evaluate its options going forward. So far, Disney has pushed all of its theatrical releases to new dates on the movie calendar. save for Artemis Fowl, which arrives exclusively to Disney Plus later this month. So it does seem as of now they're going to push Mulan. They're going to push all these movies to a later date. But if that doesn't happen, I think that they're going to end up actually trying to, just dropping it straight onto Disney Plus. Now, the last thing I do want to talk about before we get into technical analysis is going to be the fact that they suspended the dividend for the first half of the year. I'm not surprised. A lot of these companies have to get rid of their dividends, not, suspend them entirely, but suspend them for the time being. Because you have to realize, like, the money that they're going to need to sustain themselves during a situation like this is going to have to come from somewhere. It is. And so cutting the dividend for a bit is actually going to help the company in the long run. So while it might force Disney to, fade a bit and fall in the long run, if you're a long-term investor, this is actually a good thing. Because I'd rather a company cut their dividend, for a time being, maybe even a year, rather than bring on new debt at a high interest rate or something along the lines like that. Now let's look at Disney technical analysis on the Thinkorswim. If you guys don't know how to use Thinkorswim, I will put a link down below. There's plenty of videos on my YouTube channel teaching you how to use Thinkorswim. But you can see here, we had this big ascending wedge pattern that was happening, and we kind of fell below the 200-day SMA, which is a very, very, very strong support and resistance, bounced back up, took a fade, came back down, bounced on the 200, got rejected by the 50. Now we're under the 200-day SMA. This is very important. If we don't get back over this 200-day SMA pretty soon, within the next couple days, we could start trending back down and potentially hit $80 a share. If we look at the daily, which is a stronger time frame, but it takes longer for plays like this to happen. In the short term, we've gotten rejected by the 50-day SMA. This could have been a false breakout, and now I do think that in the next coming weeks, Disney could go back to $80 a share. Now, if you're a long-term investor, you're currently in this, I'm not going to tell you what to do. I would not be selling. I believe in Disney long-term. I think Disney is a great company. I don't know about Bob Chapek. I don't know about the executive team anymore. I really, really liked Bob Iger, but if you're in Disney long-term, I don't think you have anything to worry about. The one thing is I don't think a company like Disney is going to take, a month or two or a couple months to recover. The whole recovery process, the more and more that I look at the economy, the more I look at everything that's going on, the more I look at reopening the economy, the more I realize this is not going to be a V-shaped recovery. It's going to take a while. People are scared. Even if they were to lift travel restrictions, put things back to normal, people would still be afraid to go out. Just because I'm not, just because younger people aren't, doesn't mean that the people who are going to spend the real money to go on these Disney vacations and stuff, doesn't mean they're ready to get back to life as normal. So for me, if you haven't taken a position and you're thinking about taking a position, $98 is not bad. If we can hit $80 a share again, I will start a position. Personally, for me, I'm not going to take a long-term position on this because I have my eyes set to other things. But if you like Disney long-term, it's a pretty good price to get in, guys. So I want to thank you for watching. Hit the like button. Comment down below. Do you own Disney? You're planning on owning Disney? Are you selling Disney? What did you think about the earnings? Any things you like? Any things that scare you? Let me know. Also hit the subscribe button, guys. We're at 1,400 subscribers. Thank you guys, seriously, from the bottom of my heart. Until next time, I'll see you guys. Have a good night. Peace.